Okay, guys, I'm going to just do a relatively quick one here. I think this is off the poll here, but I mentioned I had this. I wanted to show it to you guys. So this is CL, and I thought I would do it in the CFD so that for those that may not have the capital or the resources or the risk tolerance to trade crude futures and either day trade them, swing trade them, or at the very least take them overnight, I give you another alternate here. So if you're trading with a forex broker, you can trade the CFD, and we can do in the micro size, so much more affordable, and not only in terms of the potential risk management, but also with regards to the margin that will be required to carry it overnight. So I just want to show you a couple of things here, and really what I'm after here is two things. One, just showing you how pervasive this algorithm is in every single market. And then, excuse me, and then emphasizing how it's happening on multiple time frames. All right, so I mean, all the way down to 100 tick chart. I mean, it's happening everywhere. So it always has to be in the forefront of your mind in terms of looking for it, because it leaves footprints, so we can track it, knowing what it did last and where it is in that sequence. So while as we sit here on a 4-hour chart, I mean, just looking at our current price action, we can, pull this up and go, okay, another golden zone. And then we look here and go, okay, well, wonder why it stops there, and just pulling from the high to the low here. Then we go, so you see it's just golden zone to golden zone, right? You see what all we're doing here is just bouncing between two golden zones, right? It's just an algo fight. So you look at that and you go, all right, okay, yeah, you've shown me that before. Okay, that's great. But what I want you to see here, let me take this off. When you look at something like this, or even if I zoom in right here, it's going to take a second to push off. Come on, get out of there. There we go. Okay, even a section like this, right here, we see this happening. And you look at it and you go, okay, great. How is that helping me? This is happening. If we're going to go down to a 15-minute, you're going to see how many different trades there were in here and how this algorithm is working on every time frame. So even if you're trading it on the 15 or the 5-minute or the 512 tick, you got to know where it is in the bigger picture. You got to know where it is on multiple time frames, right? Or you'll buy or sell right into it. Okay, so not only is this a good example, but when you're looking at something like, let me pull back out here. All right, something like this, right? You look at that and you go, God damn, man, how am I going to trade that? Right? There's not a pullback anywhere. Well, now out here on a 4-hour, yeah, that's exactly what you'd think. But if we go down to the 15-minute, look at there are literally dozens of algo trades that are in here. Right now, understand, nothing is 100%. They break. Right? Of course, one side always breaks, or we'd go sideways forever. But there's, particularly in crude more so probably than any other market, can be a little sloppy around the edges, right? It's the volatility. This is where the big dogs are trading. So you got to be careful of that in here, but you have to know where it is. So I'm going to show this to you on two. So just this little swing down here that looks so insignificant, and you'd be thinking here going, all right, well, how am I going to trade that? I've got a golden zone here and I've got a golden zone on the other side. Is there a trade there? All right, how do I approach that? Well, here's an example where perhaps an Elliott count would give you some confidence about which way this is likely to break. But if you're just looking at the algo side of it, right, no way to know. Right, so that's ultimately what we're trying to do in how we introduce the Elliott Wave count into trying to get in sync with what the algorithms did last, right? Which is why I always tell you the priority in terms of importance level starts with the algorithms. Then we add the market geometry. Then and only then, if it's helpful, do we add the Elliott Wave, right? And just recently, we've done a couple of videos where the Elliott Wave was actually hurting more than helping, because it's just causing too much confusion. But let me just carry forward here and show you guys this, because it's just striking examples of it. Okay, so here we are looking at this going, okay, well, that's all well and good. Doesn't look like there's much I could be doing in there. Well, let's go down to a 15-minute and take a closer look at this. All right, and all we're doing, I'm just taking you through, so essentially we get a double top here. So just all of this, and then as we see here now, we get a trend change, what's happening here. So down on the 15-minute, all right, and because It just comes out of what we're doing over in the futures room. So I happened to spot this yesterday. And I just thought it would be a good lesson for you guys. So look what happens here. So from the top, right? So we get a truly this tick to tick double top. So from the pivot here, first swing high to swing low, right? What do? 50 to the tick. Now, in this particular case, we just get a free fall, right? So it goes first, second, third. This is likely news driven, right? That kind of a drop throughout the course of the day, that's a bit unusual, but I say that, and then look how many of these we get, right? Look at that, right? These are, right, look at that, right? Now, again, here it is here again, right? These are, high volatility here in crude. So that's a double-edged sword, of course, right? When you're on the right side of it, oh God, it pays beautifully, but when you're on the wrong side of it, it really stings. So you've got to be careful with the risk management. So there's the first one, okay? But understand what happens in the way the algorithms are written. They just continue. If they get a sequence like this, this is why the returns of the major banks and the trading desks at Goldman Sachs, et cetera, make just obscene amount of money. Here's the next one. All right, so we go swing high, swing low. Now this one, actually, because of the length here, it comes a little short. So even though if you look here from the pivot, we do get a reaction here at the target, hard to know what they did. There is a line of thinking that you can work from a low to low, and often that will show it to you. Right? If you can't spot it here, right? This is there's another educator here who was one of the first guys. David Halsey's his name. He was one of the first guys to publish this, and he wrote a book about it. His theory is that if it doesn't make it on the traditional retrace here, that you would look for the low to low in this case. And note here we get a perfect golden zone. Then we get 2 and through, third, ultimately get fourth target. It's another thing to consider, another thing to look at, right? It doesn't quite fit with the way we teach Elliott Wave, but it's worth looking at, right? To consider if you're like, maybe. But if there's a very obvious low to low that you can go with here, see, just low to low, right? Often that'll be what'll happen. And his theory is that the algorithms, it's not there for them. They can't get the 50, so they'll take the low to low. Just another thing to look at. Okay, so we've got 1, 2. All right, let's go to the next one. So this series just keeps going. So let me get that dialed in. Okay, so we come here back to the 50. Right, this is the third one in a row. All right, so we come from here. Now this blows right through. First, they're getting second. Remember, you got a lot of volatility here in crude. We get second target. All right, so they've had 3 in a row. Now we just keep going. Now we go here. Now what happens here? Note we come up to the golden zone. So you can see they're defending here. They've got this as a target. Right, we can see it's been three in a row. Big winners, right? This is crude. These are, just this one here. What was that from? 57.30. They got second target down here, 54.70. These are massive trades. Okay, now we come up here. We get into the golden zone, but we get denied. Pardon me. The algorithm that's sold here is denied. Well, remember, there's always an algorithm on the other side. Always, always, always. So first thing you do, what'd they run into? All right, do you see what happens here? Right, the other side. So here they start at the 50. They defend all the way to the 65. So they're defending. Eventually they get it right there. So now you look there and you go, wonder why it stops there. Right, so do you see why? So I'm just going back to a pivot that I know they used. So from here, we go to the 50, and you're like, it's not right at the 50. But so you look at it and you go, I wonder why it goes through the 50. Do you see what happened here? Right, they're going up just to get that fill. Right, so it gets through a couple of wicks. Right, that's guaranteed to get their fill. Now it comes down the other direction. Right, so if you look, this is how we know it's an algorithm. It's not this. It's the reaction at the target. Reaction at the target. Look at that reaction, right? And then it blows up. It blows up the buy side algo, right? So at this moment in time, there is no support here from a buy side algorithm relative to this pivot. All the 65s have been broken. So even if I go here, there's 786, right? It's still technical. 786 still in play here. Now, is that an algo buy? No, it's not. Now, but if we were looking at this as a potential, if we were trying to think this was a 1 wave and had a little A, B, C here, that's certainly a contender for either a B wave or a 2 wave. Right? We know that's very common. That's to the tick, right? You will see that in crude. Well, now we come here. What's happening? I think I just showed you this. So now we go from here. We go, well, who's in control here? From the pivot high to low, the 65 is broken. So bulls are in control at this moment in time. Right? We can see who's got the ball. Right, so note where this is teed up to go. So they just come point of control at the 50. They got that as a target, right, which would take you right back to the 50. Look where second target is. Right, do you see that? So you go, okay, well, that's all well and good, and that's fine. Maybe that's just uniquely circumspect to what's happening right now. Well, let's just go back a little bit. Let me go back out here. Let's just see how consistent this is. Look, this is what I wanted you to show you this here. This whole move, if you're looking at that on a 4 hour or a 1 hour, you're like, well, God damn, man, I can't trade that. What an incredible rip. What do we do here from 76 to 42? Right? You catch something like that you make your fucking decade. That's you know, I'm not saying that I or you or anyone, but there is plenty of opportunity. You don't want to pull that up and go, well, God damn it, I can't trade that, right? There's no retrace. Oh, yes, there is. So this pivot up here is it's October 3rd. So just took this up here. So yeah, I think we can, October 3rd of 2018. Okay, so I'm just going back to that pivot. Now I'm going to go, I think I have to do it in a 30-minute. Did I get it here? Let me try again. Let's do that again. There we go. Okay, now I'm in a 30-minute here. Wouldn't let me. So there's the top of that. That's October 3rd of 18. All right. Now, you can do this again. You can every market, any time frame. I don't care. It's always there. First thing from the top. All right. Here's our dominant to dominant. What do? Come back. Now we're not to the tick here. They're defending. We're in between the 50 and the 618. So we go from this, we get a little stutter here, ultimately get second target, reaction. This keeps going, right? So this, now we have the benefit of hindsight, right? We know that it keeps going. Here, let's say you take profit here. So you're a seller here. This is on a 30-minute. Let's call it 75 to 72, right? That's 3 points in crude, right? Now, right? You're in a futures contract. You made $3,000 a contract. You're in an FX CFD and you're trading a mini. Well, it's not going to be $3,000, but it could easily be 300. All right, but let's just keep going. Let's just see how consistent it is. So all we're doing is just using the pivots that we know they used. All right, so if I get this right on here, so you know, the front runs are very consistent. So this looks like likely this is a front run. You will see this often, right? The algorithms will front run it. So let's get this. From this front run here on the 50, here's algo target to the tick. That's how we confirm that it's an algorithm. Do I get a reaction at the target? Reaction, now it keeps going, right? We know what happens. It keeps going. But you're looking here going, well, can I still trade this? Well, we just keep going. You just keep going. Now, this one looks like they used the second. Oh, pardon me. This is one where, so this is, you're back to that problem of, okay, the high to low doesn't catch it. But if I go low to low, 50, 50, 50, third target. All right, so that's Halsey's technique. It doesn't fit with an Elliott approach, but in terms of algo approach, that's something to look for. If you can't find it, if you're looking here going, oh man, it looks like it's going to roll on without me, this is his theory, is that what the algorithms will do is go low to low, right? And there's a lot to support that idea. So it's something to check if you don't see it. If you don't see it off of the low to high, the traditional, he calls these extensions, right? The algorithm can't get the traditional 50, so it'll go to an extension, which is low to low, right? It's not something we've spent a lot of time on. It's not essential. You don't need to know it, but it's suited to this particular example. All right, I'm just gonna keep going here just to show you how pervasive this is. All right, so swing high, swing low. There's the 50. Here's the first, second, third target, right? They just keep going. All right, so we know they used this one, so we'll come here, right? Golden zone to the tick, right? From here to right to, you can see it. Reaction, that's how we know. Reaction at the target. This one, again, keeps going. Now we have this massive downtrend. My point is, there's certainly plenty of opportunity to get into this trend. And it just keeps going, right? You'll get to the point where you can just spot them by eye. So I look here, now I can see this here, we get a slight break here. So looking here, possibly you have to go back one to get it. Maybe, until you see, I'm looking for something significant at the target so that I can identify what they did last. This looks like it's too far. So let's come down to this one. There you go, 50 to the tick, all right? So do you see it? From here, here's 50. Here's the algo target. Again, bounce at the second, third, all the way. So we keep going. Right? Plenty of opportunity to get short in. Come here. To get short in here. Right? There it is. There's 50 to the tick. Right? From here, algo target, reaction. That's how we know. Right? So you look here and you go, well, they probably did something there. Right? We know they used this. Come here. We know they likely used one of these. Here's the last pivot. Here's coming up. It's front run on the golden zone. Second target. Right? From right here. Second target. Right? We get that reaction. They could have gone here. That may be even better. Right? You're always looking. So we're literally in the golden zone. Right? So I like that even better. Get a little front run on the target. Second target. It just keeps going until we get a trend change. So you can ride these. Once these start, you just take the next one, the next one, the next one. And if you find yourself in a situation, you'll recall that if you're taking, in this case, if it's a downtrend, if the first one breaks, if they break the 65 and then it heads down, you want the next 50. That's the one that as I've shown you guys many times. So I'm just going to recreate it here. So we get a break here. Now you go to the next pivot. Right? You want that 50 because we know they're very responsive right there. Now, it not necessarily guaranteed it's going to be the pivot at the 50. Could easily be the golden zone, but we know this is one in this area that they respond to, right? Because we can track it. Just time after time after time. You'll see that over and over again. If the first one breaks, right, you're going to take a stop, right? You're going to get stopped out. Go back one. Don't hesitate to take the next one. Right, because that's a very, very, very common pattern that you'll see. Right, so how am I doing? There's 16 minutes. Let's see, I didn't want this to take up the whole day, but there's just, it's so pervasive. Now, oh God, we could go all day. I could literally go all day, just showing you one after the next, after the next. Now we get down here, we get a trend change, right? So this is the first time we get a significant trend change. So somebody got stopped out. Right, coming down here, so I can probably look here, even if we use this one right here. So there's a slight break of it. You see, it's just a couple of tick break, right? But that's enough. And even here, you would have had the alternating pivot, right? So you'd have the alternating pivot. We come back here, slight break, okay? Trend change. So now they take, this is an important point. Okay, now what they do is they take the next 50. Once they get the low in, the push off, it's the next 50 that they'll take because we have the potential for the trend change. 50, 50, 50, right? Front run, maybe. Guaranteed here, second target. Now, of course, it keeps going. So you do the exact same thing, right? It's just the same thing, guys, over and over and over again. Can't find it there. Is it here? Is it here? Right? Is it here? If you can't find it, you just haven't found it yet. Or perhaps they're using a low to low. Right? So there it is on in this case, we're going from low to high. Here's the golden zone. There's the target. Right? And you just keep going with it. Then we get here. All right, let's pull this one up. Is it here? Here? Likely. You see it? There's the target. There's the golden zone. Now you say, okay, well that must be unique to crude. Here's today's S&P. 5 minute in the S&P, where we do a lot of trading over in the S&P room. Here's the high today. Here's the low. Right? Do you see it? Right. It's same. It's every market. I don't care what it is. Crypto, FX, futures, CFDs, individual equities, bonds, you name it, they all trade exactly the same way. It's damn near tick to tick, right? So they get a little bit through the target just to get enough fill in, right? It just straight down, right? That's today's S&P on a 5 minute. You have to know where it is. You are just blind in the market. Now, so this is what drives every market. Until this changes or somebody changes the algorithm, you have to know about this. This is the foundation of everything that moves the market. This is where the algorithms live, hunt, and flourish. You got to know what they're doing. I don't care if you're looking at a weekly chart or a 5-minute chart or a 512 tick chart. It's the same thing on every time frame, always, 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 until this algorithm gets rewritten. Right now, no signs of it. They make so much money with this. That's why often you'll hear me say, don't worry, they don't care, right? They'll just take the next one, the next one, the next one. Sooner or later, even if they take 3-4 losers in a row, they will eventually get on the right side of it. And then they'll get one of those runs where it's just one after the next, after the next. And if you can follow along with that, which you can because we can identify their footprints, it's an unfair advantage, is what it is, to somebody who doesn't know that that's there. Right, so I'll leave you with that thought. All right, guys, that's longer than I needed to go or wanted to go, but hopefully that emphasizes that point, right? Don't lose track of that ever. Okay, guys.